According to Merriam-Webster, income is described as a gain or recurrent benefit, usually measured in money that derives from capital or labor, and the amount of such gain, received in a period of time. During these crazy times in which we live, people are considered to be lucky to have one source of income. If an individual is lucky to have one stream of income, imagine what it would be like having more than one stream. For example, you have income from your regular job, and another selling stuff online. Having more than one stream of income prevents you from catastrophe should you lose one of those sources. Multiple sources of income can be equated to having a diversified portfolio. A diversified portfolio is composed of investment products with different risk levels and yields, which seeks to lower the assumed risk and leverage a significant percentage of the variability of the portfolio performance. For example, let's say that your portfolio consists of 5 various assets that include stocks, real estate, gold, cash, and digital assets. If gold were to significantly decline in price, you still have 4 other assets in your portfolio, so the loss is sustainable. If your portfolio only included gold, then your loss would be significant. From the example, you can see the significance of having diversified portfolio. Likewise, having multiple streams of income can also prevent you from significant loss. When you have multiple streams of income, in most cases you will not have to live paycheck to paycheck. There have been many studies done on the rich, and the research shows that rich people have multiple streams of income. In fact, according to the IRS, the rich have 7 sources of income, which include earned income, dividend income, rental income, royalties and licensing, interest, capital gains, and business profits. Some of the incomes are passive, which means little work or no active involvement is needed to generate the ongoing revenue. You literally make money while you sleep. In this video, I will briefly explain the 7 sources of income of the rich. Income Stream 1 comes in the form of earned income. Examples of earned income include wages, salaries, tips, and other taxable employee compensation, and includes net earnings from self-employment. Most people understand what earned income is, because they are trading time for dollars. As mentioned, most people rely solely on their earned income, and if that income is lost, they will be in extreme survival mode. The rich do not rely solely on earned income. We all have the same amount of time each day, and the way we use that time is crucial. The rich know how to utilize their time to earn more money. Income Stream 2 comes in the form of dividend income. Dividend income refers to any distribution of a company's earnings to shareholders from stocks or mutual funds you own. This stream of income is passive. What would it take to live on dividends? The general formula is X divided by Y equals Z, where X is what you need to live on, Y is the portfolio yield expressed as a decimal, and Z is the required portfolio value. To keep the math simple, in order to generate $40,000 a year from a dividend yield of 4%, you would need a portfolio of roughly $1 million. Having a portfolio of $1 million is no small feat, but the amount is just an example, and smaller amounts can be used. Income Stream 3 comes in the form of rental income. Most people understand the concept of rental income. Rental income is what is earned from tenants after the mortgage, property management company, and other costs are subtracted. Whatever is left is what is known as cash flow. Rental properties can include single-family homes, apartment buildings, or commercial real estate, renting property to other businesses to use. Owners of rental properties are more concerned with investing for cash flow rather than the appreciation of the property. For example, let's say that a tenant pays $2,000 a month. The money is received, and the mortgage, property management company, and other costs are subtracted from the $2,000. If those costs are $1,500, then the owner's cash flow would be $500. If the owner owns 8 apartment buildings, then he would profit $4,000 for that month. Now, that is what you call building wealth. Income Stream 4 comes in the form of royalties and licensing. This type of income stream is considered passive. A license is the right to use something that is owned by someone else, and permission is given to the licensee under the licensor agreement, whereas royalties are the payments for that use. For example, let's say that you own a stock content website where you sell images, videos, audios, and vectors. You could license out the content to customers for them to use in their projects and charge them a monthly fee. In the license agreement, you could tell the customers that they can use the content in their projects for profit, but they may not sell the content from the website directly to a client. Income Stream 5 Comes in the form of interest. According to Investopedia, interest is defined as the amount of ownership a stockholder has in a company, usually expressed as a percentage. Albert Einstein once said that compound interest is the eighth wonder of the world. He who understands it, earns it. He who doesn't, pays it. In the case of the rich, they understand it, therefore, they earn it. Interest can be earned in many ways, such as from a bank money market account, lending it to the government in the form of treasury bills, and certificates of deposit in the form of CDs, just to name a few. However, the vast majority of the rich get their interest from being stakeholders in companies. Interest income is also passive. Income stream 6. Comes in the form of capital gains. In simple terms, a capital gain is an increase in a stock's value. It is considered to be realized when you sell the stock. A capital gain may be short-term, 1 year or less, or long-term, more than 1 year, and must be claimed on income taxes. The tax rate for short-term capital gains and long-term capital gains differ. You will pay more tax if you hold the stock for less than 1 year. However, you will pay less tax if the stock is held for at least a year or more. Rich people hold stocks for the long term because they do not want to pay the taxes on short-term investments. Income stream 7. Comes in the form of business profits. A business profit is the financial benefit realized when the revenue produced from a business's activity exceeds the expenses in sustaining the business. Any profits earned can be funneled back into the business or taken for cash. Profit is calculated as total revenue, less total expenses. There are 3 types of profit concerning a business, and include gross profit, operating profit, and net profit. By far, the most significant type of profit used is net profit, which is a company's bottom line, after all other expenses, including taxes and one-off oddities, have been removed from revenue. The previous slides explained the 7 streams of income, which on average is how the rich make their money, according to the IRS. You don't necessarily need these 7 sources of income, but they can be used as a guide. It is also possible that you don't need 7 streams, but the more you have, the more secure you will be. As mentioned, the point is to diversify your income like you would your investment portfolio. That way, if you lose one stream or one investment, you will still be okay and able to press on with life, without any major setbacks. If you enjoyed this video, click the subscribe button and select the notification bell, so that you receive the content that will build your financial muscle.